Alright, good afternoon everyone. Welcome to another Wednesday market stream. We're going to try something different. I'm going to try Twitch TV today, see how it goes. I don't think a lot of people have gotten the message yet. Obviously we still have 0 viewers, but hopefully as we start streaming, people will come in and see what we're doing. If not, then we'll have the recording up for our Patreon page later on. My name is Stockdarts, and as usual we're going to do the following. We're going to look at the 4 major market ETFs. We're going to look at the S&P 500 on SPY. We're going to look at the NASDAQ Composite on the Qs, the Dow Jones with the DIA, and the Russell 2000 small caps with IWM. Once we conclude that, we will take a look at the US dollar, see how it's behaving, see how it's affecting stocks, and more importantly, how it's affecting commodities like oil, gold, and silver. And then when we finish that, if anyone's around, we'll go ahead and take some chart requests for anyone that's looking for something like that. Other than that, let's go ahead and get started. We're going to go ahead and take a look at the S&P 500 first, where they look at SPY. As we can see, today's a negative day. I was actually a little bit surprised about what we saw yesterday. For those of you that follow me on Patreon, I had mentioned that it looked like we were going to dip further. My expectation for anyone that was here last week on Wednesday was that we were going to find a bottom, a temporary bottom, and we were going to bounce, but that bounce would be short-lived and would ultimately fail. And that was what actually happened, at least to start the week. But then yesterday we had this nice big switch in momentum and moved higher. And it looked like maybe I was wrong. But with today's action, it looks like in the end that we are probably still headed a little bit lower. Now, I still think that this is not necessarily negative. I still think that in the long run, things are still kind of bullish. But as far as where we stand now, where we stand particularly in the short term to intermediate term, I think that we still need to come down a little bit lower and figure out exactly where we can find some support. If you take a look at the clear levels here on the S&P 500 and what key areas we need to watch, the lows that we printed about a week and a half ago are pretty critical. I think that we're probably going to try to push below them, maybe test the 200-pair moving average. And again, I think as long as we don't lose the previous pivot low that we formed in the beginning of June, late May of last year, I think we're okay. I think that's still the major area that we need to concern ourselves with right now, is exactly, that we don't want to go backwards and we don't want to lose this area that we sort of use as a launching point for a breakout to new highs. If you notice what we've done right now, for the most part, if you interpret it from a longer term perspective, it looks like a bear flag. Right, we had a move down, and then we've sort of spent some time sideways. And typically, what happens in these scenarios is you have a move down, then you have a retracement, then you have the next move down. Right, and then that is usually where you end up finding a stronger or more definitive bottom, and that's kind of what I'm waiting for. Now, again, what I'm hoping is that we stay somewhere in this upper range of the longer term range that we've spent. If you go ahead and take a look at longer term, what we've done over the last couple of years, we've mostly traded sideways, and we had actually broken above that range to start this year, which was looking pretty bullish. But then again, at the close of last year, we broke down to the bottom of that and ended up being a false move to the downside. And it looks like right now what we have is a false move to the upside. And, so it looks like we're still range bound, at least for the short to intermediate term. I think in the long term, we're still setting up for a nice breakout as long as we don't head back down to the bottom of this range. And that's why I think it's critical that we don't really drop below this 275 spot. Because I think if we lose that level here, then I think it's inevitable that we have to head down further and figure out exactly where the bulls are and start testing our previous levels of support. And we don't really want to come back down to 260 to 255. So I think if we do that, then that obviously makes the chances of a breakdown much higher than where we are right now, and might end up making this broad range a top instead of just an accumulation base and a spot from which to launch into another rally higher for us. So we go back to the daily chart. It's critical that whatever we do here, if we do pull back, if we end up losing this 280 to 281 area, that we don't fall too much below these 277, 276, 275 area. And if we could find some support there, then I think that we're still holding pretty well. Now, again, in the short term, that's not that great. And in the intermediate term, it means that we're still range bound and still trading sideways. But in the long term, it still means that we're holding in the upper half of that broad range that I mentioned earlier. Now, if you notice, this pattern has played out before. And what I mean is this bear flag pattern. Obviously, the longer term pattern is held. But if you'll notice, a lot of times when we have these pullbacks, you'll have a move down, then you have a kind of a consolidation move, and then you'll have the next impetus down. I'm not a big wave theory guy, but I think a lot of times the market does move in these easily viewed waves. Unfortunately, a lot of times it's really in hindsight that you see them. But it's often that what you have is you have the strong move down, you have the consolidation, and then you have kind of the finishing move. And this tends to happen in strong moves, not necessarily any move down. A lot of times, and it happens in strong moves up as well, but a lot of times when you have a really strong move, like what we did to start the last couple of weeks when we sort of topped out, and you have this big move down that scares a lot of people, it ends up having a lot of momentum that takes a little bit of time to dissipate and to be absorbed by the buyers. And so that's why you tend to have that first failed bounce, which is the early birds that come in, and they don't have enough support to continue pushing the market back to highs. And what ends up happening is you get this failed bounce, and then you get the next wash down, and then that's where you find some more the more cautious traders, the ones waiting for more critical levels that come in and hopefully bottom it out. It doesn't always happen in one move like this, but it does happen quite often that you'll get that move where you get the strong move down, the sideways move, and then the next move, and then from there you end up having a better bottom. And that's kind of what I'm hoping for, and what I'm looking right now is that we get this next move down is ultimately the one that finds the bottom for us. And if that happens, then we should be good for a move back to the upside. Now, that's the kind of thing that could take place over the next 2 weeks, or it's the kind of thing that could end up taking place over the next 2 months, right? Because just because we end up finding the bottom doesn't mean that we're ready to resume a move back higher. A lot of times what happens is then you come up and retest this level again, and then a second time, and then eventually are able to break through. But as long as we hold these support levels and we don't fall too much further below them, then I think we're still holding up okay, and I think that we can go ahead and trade sideways and make a move higher. Now, for those of you that are regulars, you know last week I pointed out that I think our environment switched to more of a neutral and sideways environment, and I think that's where we stand right now. So my focus right now is still looking at range-bound plays. For those of you that follow me on Patreon, patreon.com/stockdarts for anyone that's interested. The post that I put up on Monday was one where I wasn't looking to trade very actively this week. I'm still doing what I did last week, which is taking some volatility sells using options, or focusing on the forex markets, and more importantly on the cryptocurrency markets. But as far as stocks are concerned, I'm not looking to directionally trade too strongly right now. What I'm doing is I'm looking for names that I have a lot of belief and conviction in, and finding areas that I think would make a good spot for them on this next move down. And what I mean by good spot is a good spot where I'd want to buy at a key support area where I think is a good value. And I think that's the environment we're in right now, is one where we want to look at names, that identify names that we like, that we think are strong, that maybe we missed a strong move on prior to this. Earlier this year, obviously, we had a strong move. We've been kind of climbing the entire year, and there's a lot of names that a lot of us have sort of missed the boat on. That it took off without us, and we weren't able to buy at whatever price we wanted. And these kind of moves down are the points where we can actually look to go ahead and identify a good value area that we want to use to go ahead and enter some of these names that we might have missed earlier. And so that's what I'm doing. For instance, say Apple, right? There's a couple other names that I put on there, but I'm going to leave that for the Patreon visitors for now. But a name like Apple, right? If you go ahead and take a look at it, it's had a strong move all year. It's recently started to have a lot of volatility going back and forth. But this area just in the 190s is a good spot to go ahead and look at getting long. It's above it now, but if we have another move back to the downside, we can see two different trend lines that are supporting it at that level, which could end up being a good spot to go ahead and purchase some if it kind of came back down and found some support around that area. Just to kind of stick to the FANG names, Amazon. Amazon has a really good support level down here at 1600. I doubt it gets to that level, but we have another level down here around 17, which is also a pretty good key support area, which is not that far away. For anyone that's being patient, again, you can see we had the big move down, we have the consolidation, and then if we get the next move down to around here and we find a more stable bottom, then that could be a good spot to go ahead and take a look at finding some support and finding a good value buy for something like Amazon. Again, Facebook is another one that we could look at. Facebook's been holding up pretty well, but again, we got the big move down, and we're starting to lose the previous pivot level, and we come down closer to, say, the 200-pair moving average, somewhere around this island from the last time I had a gap up. That could be a good support area to go ahead and maybe buy some Facebook if that's a name that you've missed a little bit on as this year has started. There's a lot of other names like that, but this is the time to look at stuff like that, because I think for the moment we're not in a good spot to buy. I don't think we're really in a good spot to go ahead and short the market either, because I still think there's a lot of support that's underneath the surface that's going to make these short trades difficult. And to make that clear, just take a look at what happened yesterday, right? For anyone that wanted a textbook short, what we had on Tuesday was the perfect scenario, right? You have this strong move in the market, then we have a bounce up to what should become a strong resistance area that was previously a support area, right? Which is this area around 291 to 292, which is our previous highs, which we were using sort of as a floor to hold price action once we pulled back to it, and we failed immediately. But once you come back to that, that becomes a really good spot to short. And as you can see, the first 2 days after trying to breach that, we did pull back, and that's a nice clean short area for anyone that likes to short this sort of play. And it's actually a very textbook play for anyone that wants to look for a shift in character in the market. But what ended up happening, we had that big strong move yesterday, which is a lot of buyers that were waiting, hoping that this was a temporary pullback, then we want to make our way back to all-time highs. And so anyone that took this short and thought it was a perfect short probably got faked out yesterday. And what happens today? We made new lows and are making our way back down to the lows that we printed just a week and a half ago, right? And so I think because there's still a lot of buying coming up here, and someone might say, oh, but it's because of the news. And the truth is that the news, it's really our reaction to the news. And right now you can see that the market's a little bit skittish and is a little bit worried. That's why we get these quick moves to the downside. But at the same time, there's enough buyers stepping in here that it's going to make the short really difficult, right? So we're at a spot where it's not really ideal to go ahead and buy too much, or it's not really ideal to short too much. So what we have to do is be patient. And I think what I want to do personally is look for these names that I was telling you about and wait for a better opportunity, a higher probability setup, and kind of remain disciplined and not let the market chop me around, because that's where we are right now. We're getting this conflict between this newly emerging sentiment that the market is struggling versus the longer term sentiment that says the market is still in a good place and still ready to go higher. So when you have this conflict, you have these long term buyers and these short term sellers, you're going to get these muddy waters, you're going to get this chop back and forth, and that's kind of where we are right now. So what I'm hoping is we pull back maybe another couple days, and we find a more substantial bottom, even if it occurs at the same spot at 282, or if it falls a little bit below there. As long as it doesn't fall anywhere below 273, 272, then I think that we're okay. And at that spot, hopefully we get a better pattern indicating a longer term bottom, at which point we can look at playing back to the long side, at the very least back up to this 292 to 293 area. I think all-time highs might take a bit longer to get there. It might even take another FOMC report or two. But for the moment, as long as we trade sideways, we can find plenty of nice range-bound plays as long as the market doesn't turn sharply to the downside. And again, I think it'll be pretty clear if we lose this pivot area. At that point, I think then we could change our stance and we could look at how we want to go ahead and reevaluate the plays that we're going to take. Now, if we move on to the NASDAQ, we can see very similar pattern to what we saw in the S&P 500, right? We had the big move down. We have the sideways consolidation. The move yesterday that actually pushed to clear the bounce that we had last week, at the end of last week. And again, it looked like a nice reversal until what we saw today, right? And so it looks like a lot of the guys that tried to buy this ended up getting shaken out. and we're right back below yesterday and Monday's lows, and heading probably down to last week's lows. And very similar to the S&P 500, we have a clear level here, 178. That if we lose that, we're going to head down and test maybe the 200-period moving average. And what we don't want to see is a loss of the pivot that we formed in June and May. Now, there's a lot of room to go down here before we really need to consider that a loss point. So I think in the intermediate term and in the long term, we're still okay. But in the short term, it does look like we want to head a little bit lower and test some of these key areas. And again, as long as we don't get too far below those levels, I think we're okay. Give me 1 second. All right, sorry about that. So as long as we don't fall back below that area, then I think that we're still in the same neutral stance that I pointed out in the S&P 500, which is where we're just really in the long term. We're really just backfilling and testing the upper half of this broader range that we have. And I think that's okay, and I think that was probably necessary. A lot of times when we have these breakouts to new ranges and you come back and retest, you don't always stay above it. But as long as you don't fall back too far below it, this ends up being like sort of a false breakdown. And then you end up coming right back up and printing new highs. And at that point, you're usually good to go for a pretty good long-term move, right? So that's kind of what we're hoping for, and hoping it sticks to that. But at the moment, for anyone that's trying to trade this, well, we're in that choppy range where we're just retesting these zones, right? So it's going to make trading difficult if you're a swing trader. If you're a day trader, this should be really good for you. And I know a couple of you that are in here are probably day traders, and that are from our Discord chat. And if that's the case, then you guys know how well this market is giving day traders, because we're getting these strong moves back and forth. With a lot of volatility, right? Now, sometimes this is pretty difficult to catch, right? So, like today was an easy move to the downside, but yesterday you had that big explosion, and then we chopped around for most of the day. But this volatility, a lot of these back and forth moves are really good for day traders. And so this market has been a little bit more kind at the moment to day traders than to swing traders. I think for swing traders, it's a lot more difficult because you have these big moves back and forth from day to day, and you can't really get a nice clean directional move that you can really rely on. And so for anyone that's a swing trader at the moment, I think that you need to be probably doing the same thing that I'm doing, which is either taking advantage of this volatility with options or waiting for a cleaner directional move that should hopefully emerge within the next week or so. I think by next Wednesday we should have a clearer idea of where our bottom is and where we want to move, or possibly maybe, for all we know, today's a false move and we come right back up and we clear these highs. But at that point, by next Wednesday, it'll be clear whether this is going to be a pullback or not. But my inclination is that this is going to be a pullback, and then we're going to come down and test some of these lower levels. And once we do, we should hopefully form an easier to understand or an easier to spot reversal pattern, which should give us some easier plays to the long side. But until then, I'm just going to be patient and continue to wait and look at other equities that get, or other trading vehicles that give me better opportunities than what I'm seeing in the overall markets. Now, as far as the key levels on the NASDAQ, I think I kind of pointed them all out already. But basically, we have this breakout from the previous pullback right around 178, which we kind of held just above it last week. And that's still the initial area of support that we're going to encounter, right? So there is always a chance that we hold there. But if we lose that level, just below we have the 200-period moving average, and then even further below it we have this bottom that we formed in June, right around 170 or so. Now to the upside, this area just above us, around 187 to 188, is obviously going to be strong resistance in the short term. If we can clear that, then that's going to be a big positive for the market. And that likely means that we're going to come up and retest all-time highs. So keep that in mind as sort of the point of a point of demarcation where we can say that the market character has changed significantly. and probably means that we're not neutral anymore and that we're bullish. So that kind of becomes an important area for us to watch. You'll notice the 20 and the 50 period moving average are converging right at that spot. So if the price action were to get right back above that, then that would mean that we're likely to head forward, and that probably would mean that we have some significantly good news, probably involving the tariff war between China and ourselves. And that would likely mean that things have improved enough where the market is confident enough that we're ready to head upwards. But I don't think that we're ready to break that level. I think the more likely scenario is that we have to come back and test some of these lower levels first before we could come up and try to probe through there. But you never know. The market catches a lot of people off guard. It caught me off guard yesterday with that strong move that I was not expecting. If it did it again, then that would mean that this move to the downside was really the one that caught people off guard. But I suspect that we're probably going to have to test some lower levels first. Now, down to the Dow Jones and the DIA ETF, and again, it's the same thing. We had the move yesterday to test that upper range of the levels that we kind of spent the last couple of years in, and we're right back down. Now, you can see with the Dow Jones, we're already at the 200-period moving average. We're kind of testing through the bodies of the lows we printed last week. We have some wicks that we haven't come down to yet, but we're kind of retesting the lows from last week already. If we lose that, again, the pivot level around 247, 246, which was from earlier June, becomes a critical level. And with the Dow Jones, that would mean we're already kind of down to the middle of our previous range. And again, if we lose that level, we're likely heading all the way down to the bottom of that range that we spent the last couple of years in. And I'll pull out to the weekly chart on the Dow Jones so you can see. Right now, we're right here around 256. And, you know, if we can hold anywhere above 248 to 250, I think we're still pretty positive. And again, all we're doing is really just retracing and still building up momentum to break out. But if we start to lose this kind of upward momentum here, right, then that's when we have a problem, and that's when we're likely going to head a little bit lower. So that's kind of where we stand right now in the Dow Jones. A lot of the analysis I mentioned for the S&P 500 and the NASDAQ also applies to the Dow Jones. We need to get back above this 265 in order to really say that we're back in a bullish environment. That would likely mean that we have to break through this 20 and 50 period moving average, which is also moving downwards. And anything below 255 or so means we're probably going to come down and retest this pivot low. Other than that, there's not much I need to add to the Dow Jones. I think it's very similar to what happened with the S&P 500 and the NASDAQ. I think at the moment, all three of those are moving so closely together that we don't even have to look at. There are minor differences. Obviously, the NASDAQ showed a little bit of strength, right, because it actually cleared some of these levels yesterday, while the Dow Jones was not able to clear this range. So there's a slight relative weakness here, but I don't think it's enough to really warrant any kind of further investigation. I think all three of those indices are moving pretty closely together, and I think the big difference, of course, is what we're seeing on IWM and the small caps. And as we can see, they continue to act weaker than their peers. They're right down to the bottom of that range that we spent the last couple of years, and you can see we've already lost the lows from last week. So traders are still pretty wary of the market, at least as far as small caps are concerned, which means they're not willing to take risks right now, right? That's the big takeaway you can always have when you're looking at the IWM and the small caps versus, say, something like the S&P 500 is when traders are willing to take risks, these small caps are going to behave better because they're the more volatile assets, so the ones that have more risk attached to them. And when traders are greedy, when they're looking for moves to the upside, they're going to attach themselves to these names because these are the names that give stronger moves. However, when traders are fearful, they're going to abandon these names first because the volatility to the downside is going to be too much for them, right? And that's what's happening right now is traders are not really looking for long side. They're looking to protect their capital, and that's why they're leaving the volatility and the small caps more quickly, and that's why we're seeing the small caps and we're seeing IWM behave poorly. Now, we want to see them hold here. We don't really want to see them fall below 145. If it happens, I don't think it's the end of the world because, again, the small caps have been so weak that the market can continue to stabilize even with IWM printing new lows. but we don't really want to see it, right? So this is our first warning signal as far as further weakness coming into the markets is if IWM loses the lows we printed in June. I think if it does, it doesn't necessarily mean that the rest of the market is going to lose those lows, but it might mean that the rest of the markets need to come closer to them and test them further, which is probably going to be what happens. But ideally what we want to see here is we want to see the other three market indices kind of stabilize and maybe head a little bit lower, while IWM tries to get ahead of the curve and find support first and try to bounce before the other indices do. I think if that's the case, that could show a little bit of a bullish reversal. I don't think that's going to be what happens, but that would be the nice thing to happen if you really are looking for a strong move to the upside later in the year. Now, if we lose this 145, you can see there's a lot of room to the downside with the small caps. Not saying that a move below 145 immediately equates to a move all the way down to 126, but as you can see in our previous move down there, there's not a lot of real substantial support. There's a small area here just below it around 142, which would probably act as the first area that we try to stabilize, but below that, there's a pretty strong vacuum all the way down to maybe 133, and then below that all the way to 125. So there's not really a lot of substantial support, at least looking at the previous pullback. I think if we go to the weekly chart, we can see maybe, again, where these levels kind of came in. You can see the 142 right here, and then you can see the maybe 140, and then the 138, 135, somewhere in there. But for the most part, the real substantial floor is all the way down at 133. So there is plenty of room to the downside on the small caps. And if we do start to get a strong move to the downside here, that likely means that the other indices are going to need to come back and test further down. So we do want to keep an eye on them. But I think what's more important for me, at least as far as how I'm gauging the markets right now, is by watching to see what the S&P 500 and the NASDAQ do with the levels that we looked at according to them. Right? And so that is really how I'm looking at the market right now, is looking at the S&P 500 and the levels that I pointed out earlier, right? So this 280 level, and then this area around 273 to 274. Those are the key points that I'm watching to see whether I need to change or whether I think the market is changing character. However, IWM will be the first warning sign if and when it loses those lows from earlier June around 145. That's kind of where we stand right now. I think in the short term, we're still kind of bearish. I think in the intermediate term, we're pretty neutral. And I think in the long term, we're still bullish, but I think it's more neutral at the moment. Because I think we're going to need to spend some time trading sideways. And I don't know, now that we're right back into that range that we spent the last couple of years in, it's not quite a coin flip, but I think that there's still a decent enough chance that we explore the lower edges of it. So let me go back to the weekly chart for a second and explain what I mean. So we're right back in this range, right? So that means intermediate term and long term, for the most part, you could still consider neutral, right? Because we're basically trading sideways. I think that we're still more bullish than negative because, again, in the really long term, we're just continuing to climb higher, right? And what I mean by that is if you really go back long term, ever since 2008, 2009, we've just been climbing straight up, right? So if you want to look at ultimately in the long term, we're still very bullish. Now, depending on how you define your time frames, in this intermediate term, we're definitely neutral. And in the short term, we're kind of bearish or neutral, depending, again, on how you define your time frames. But for the most part, what we're doing right now is still part of this trading range. And because of that, even though we're at the upper edges of it and trying to set up for a move back to the upside, there is always a possibility that we continue to head lower and we test the bottom of that range. And if that's the case, that again doesn't mean that we've all of a sudden flipped to bearish in the long term. It will be bearish in the short to intermediate term, but not in the long term until we lose that range and sort of top out, at which point we might head lower and test some of these. At that point, we might retrace this big move that we had in 2017. But that's kind of, at the moment, just more theoretical. I think really what we need to focus on right now is the key levels that I mentioned earlier and see if we can hold above the 200-period moving average or slightly below it. And maybe, I think it's a little early for that, but maybe we're going to start printing something like this. And then maybe it'll turn into a move up, right? So This to me is kind of the idea of what I'm expecting out of us, which means that for the most part we're still kind of just chopping back and forth, right? And ideally we'll find some support here around 279, 278, start to climb upwards, and eventually break the downtrend that we're seeing now. Now again, at the moment this is a down. This trend line doesn't mean much, right? Someone could draw like this if they wanted, which I think is probably too steep, but I think that we maybe have something like this forming or starting to develop, in which case we should get a bounce and try to hit it and then maybe come down. But ideally what we'll find is we come down, find a bottom, and then from there we'll make our way up and test the top of that range. And so my overall idea right now with the market is I'm waiting for a more substantial bottom, at which point I'll be looking to buy the dip and look for more long plays. But for now, I'm just going to be patient and wait. And again, keep an eye on those levels. I think those are important as far as deciding whether we need to reevaluate where we stand. Now, the U.S. dollar has been kind of odd lately. If you just look at it as an aggregate, it's still pretty bullish. We had the pullback, and we had a sideways consolidation. You can see that we kind of downshifted from this channel upwards. We pulled back, but then we started climbing again, and we can even maybe readjust this to something like this at the moment. And the last 2 days we've kind of climbed upwards again, but we're not really seeing that across the board. If you take a look at the euro versus the U.S. dollar, the euro did pull back over the last couple of days, but the euro is looking like it's attempting to. It's still trying to find a bottom versus the U.S. dollar. Now, remember, this is inverse to the UUP index. So up is good for the euro and bad for the U.S. dollar. While the U.S. dollar has gained some ground versus the euro, I think the euro is still almost maintaining this breakout. And we'll see whether it can continue to climb upwards. You can see it's finding a lot of pressure here around 122. And it's going to need to clear that area at some point in the near future if it wants to continue climbing higher. But at the moment, I would consider this chart a little bit more neutral than the bullishness I'm seeing out of the UUP index. Because it looks, there's still plenty of opportunity here for the euro to rally. But again, at the same point, there's plenty of opportunity for the U.S. dollar to continue to push the euro down and through some key levels. I think the area we want to watch right now, I probably should have just kept the other box. Yeah, let's just do that. This is the area that the euro needs to emerge from in either direction in order to get a clear picture as to whether it wants to go up or down. I think if it loses 111, it's likely going to head lower. And if it breaks through 112, it's likely to head higher. So that's kind of what we're watching. But for the moment, it looks kind of neutral to me. If we look at the U.S. versus the Canadian, it's actually kind of bullish. And I think this mimics a little bit more what we're seeing on UUP. However, it's coming up into some pretty stiff resistance. And we'll see whether it can break through there or not. But you can see the strength that came in over the last day or two. And it's kind of right back up there. But it has acted pretty well. And it's actually moved pretty strongly over the last month or so. And is now coming up to what should be a pretty strong resistance area. And it means it should probably shift to neutral here as it tries to build up momentum to break through it. And if we look at the U.S. versus the yen, we have the opposite. Now, we did have the big move yesterday, but it's kind of struggling, and it's actually moving downwards. So we kind of have a mixed bag here with the U.S. dollar. Each of these individual currency crosses has had pretty interesting moves in one direction or the other, but when you look at them as an aggregate, you got one going up, one going down, and one kind of sideways. So it makes it real difficult to really figure out exactly what's going on with the U.S. dollar. And if we move on to gold and silver, you can see with the U.S. dollar, not really sure what it's doing. The gold and silver have been able to move kind of unfettered and have actually been climbing pretty strongly and have continued to move. Now, we did have that big shakeout yesterday, which happens often with gold. A lot of times you get these volatile moves, but it's doing pretty well. I kind of regret not being more invested in this move. I kind of missed this last move up. I have caught some of these gold and silver moves, if any of you guys that watch these Wednesday webinars know. But this most recent move, I definitely have not been able to I did not take advantage of it, and I missed out quite a good amount of this. And at the moment, it's kind of hard. I think if you're in this, I'm not sure who's in here. I can't see the names on here, but if Ray is in here, hopefully his play in gold has still worked out okay. But for the rest of us, we need to wait for a clear consolidation pattern and then go ahead and take advantage of it. But um, it's a weird world. It's a weird world we're in right now, where the U.S. dollar is trading at highs, and then gold and silver are trading at highs. Typically, when that happens, the market is trading at lows, and we're not really seeing that right now. Um, so I'm not really 100% certain exactly why we have all of these moving up together. Typically, the U.S. dollar and gold and silver are pretty strong, inversely correlated. And at the moment, now again, the U.S. dollar has kind of been in a weird place, but gold and silver are moving pretty strongly despite that. Now, the final one we need to look at is oil. And oil is in a weird place. It's tried 3 times now to break this downtrend, and it's been able to sort of break through it, but at this point we have a new sort of trend line that is really knocking it down each time. And same thing happened again today. It tried to break through it yesterday, came back and failed, and it's still just chopping back and forth. Now, it has found support here between 54 and 50, but it's really struggling to kind of break this momentum and shift back to the upside. You can see all the moving averages tangled up together, moving downwards, indicating that the trend is down right now. And it's going to need to break this red trend line before we can have any kind of faith in a move back to the upside. I think it probably will do it sometime in the next month or so. But for now, it's neutral, and it's just going back and forth, and there's really not much we can do with oil that makes sense. All right, so that's the U.S. dollar, oil, gold, silver, commodities, all that stuff. You guys have my thoughts on the market already. We have a little bit of time. I have yet to try Twitch out, so I'm not sure how the chat works, or if you guys were able to have a chart request on here. But if anyone on here is looking at a chart and wants me to take a look at it, feel free to put it in the chat room. I'd love to see what you guys are looking at, and if I can help you with your interpretation of any chart. Also, I want to make sure that this Twitch chat works. So if you're in here and you're watching, we have a few viewers here. Type something in the chat just so that I know that you're able to chat, because that was kind of the reason we left Ticker TV, was because I couldn't interact with the viewers too well, and hopefully it works better with Twitch. I'm not sure if you need to be registered to chat, or if you could chat as a guest. So hopefully one of you guys can just type in anything, letting me know that, even if it's not a chart request, just letting me know that you're able to chat. Oh, okay, thank you, Blackhawk. So you have to be registered. Alright, so that might explain it. I assume Lana's one of the ones in the chat. Alright, well, in that case, hopefully next week we can get some more viewers and we can get them to register, and we can maybe get some chart requests. But for now, I just wanted to experiment and see what the quality is on this stream versus the others. And hopefully moving forward, we can use this instead of Ticker TV, which was kind of giving me some problems. It wouldn't even archive any of the videos. I think Twitch is only going to archive them for a week and a half, but really at that point, these aren't that relevant anyway after that. So, all right, guys. Hope you guys have a good rest of this week, and we will try this again next Wednesday.